financial market. Also, we're joined by Dasha Kuts. She is a senior sustainable manager of Ogier Global. Also with us here is Aidar Kazybaev. He is the general director of green investment of the financial center of Astana. Guillaume Rabault from HSBC Asset Management. Yerlan Syzdykov, the head of the division for developing markets, co-manager at Amundi Asset Management. So this panel discussion will deal with investments, ESG investments in capital markets. In Kazakhstan, we discuss this topic quite often. We also conduct training workshops dealing with this issue, how to attract capital in domestic market. And today we have invited international asset managers who will tell us more about the trends in this market internationally. And also we have one of the key investors in our market, who is Nurzhan, Tursunkhanov. Colleagues, I would like you to introduce yourselves briefly. Everybody will be very interested to know more about what you do, what investments you make. I will be very brief, and I will just say that everybody now is becoming more and more responsible and aware of environmental social responsibilities, which correlate with the 17 United Nations Sustainable Development Goals. And of course, it's clear that the transition to sustainable development, inclusive growth, and a carbon-neutral economy requires large-scale investments from both private investors and the public sector. And against the backdrop of these trends, the importance of responsible investors who are increasingly interested in the non-financial effect of the investment and the selection of companies that comply with the principles of environmental, social, and corporate responsibility is increasing. A landmark event in the development of responsible investing has been the creation and adoption by international institutional investors, with the support of the UN Environmental Programme, of the Principles for Responsible Investment, which aim to minimize the risks of long-term investment, taking into account ESG criteria. Notably, by 2021, more than 3,500 business entities managing more than $100 trillion in assets have declared their adherence to the principles for responsible investing. A significant role in encouraging investors to make investment decisions in accordance with ESG principles has been played by the introduction by many countries of regulations and policies related to the establishment of ESG criteria and the development of responsible investing. According to PRI and UNEP-FI research, more than 500 legal regulations have been introduced in 50 countries around the world that address ESG policies. 48 of the 50 countries have some form of policy in place to help investors assess the risks, opportunities, and outcomes of their investment decisions. And this is something our regulator has been talking today. As a consequence, there is a growing demand for financial instruments for responsible investing. For example, a study by the Global Sustainable Investment Alliance Review shows that in 2020, the total volume of sustainable investments in major markets will be $35.3 trillion. The Global Sustainable Investment Alliance Review shows a total of 35.3 trillion sustainable investment assets under management in 2020, representing 36% of all assets under management. ESG ratings are actively developing. Today, there are already more than 100 ESG rating agencies in the world, including MSCI, Bloomberg, FTSE, Russell, and many others. And all this, of course, needs to be discussed. Against the background of increasing importance of responsible business policies, the need to assess the integration of sustainability principles in business processes of companies will continue to grow and eventually become an obligatory condition of their investment attractiveness. Today on our platform, we have gathered professional practitioners who will discuss with you the development of responsible investing, formation of new investment strategies, ESG rating system, both in the global market and in Kazakhstan. Esteemed participants of the conference, throughout our discussion, you can ask questions by scanning the QR code on the screen. You can also join us in our Telegram bot. You will see all that on the screen. You can access this chat by pressing the button under the video player of these broadcasts. In the chatbot, we also are asking you to take part in our survey. The question is, what in your view is the obstacle in the development of responsible investing in Kazakhstan? Results of this survey will be discussed by us at the end of this session. Let's move on now to the discussion itself. The first question, I would like to address it to the representative of the National Bank, Nurzhan. What is the role of the National Bank in the management, in investment management? Also, how are you planning to use ESG principles in managing state assets, pension fund assets, etc.? Thank you. Alina, thank you so much for giving me the floor, for the invitation. Good morning, colleagues. I said this yesterday, but thank you that you chose specifically our panel discussion. Hopefully, it will be an interactive one. So my name is Tursunkhanov. I'm the director of the Department for Monetary Operations. Apart from the monetary policy, to put this simply, basically, this enables you to see the foreign currency market. This is what we do. But apart from that, we are also involved in managing gold reserves of the National Bank, which amount to about $33 billion. We also are responsible for managing assets of the National Fund, $55 billion. We're also responsible for managing pension assets, which amount to 4.1 trillion tenge. If we convert this into dollars, that will be about $30 billion. There are some funds, such as the State Fund of Social Insurance and others. And so we work with them. Each of them is worth about 1 trillion tenge, and we want them to be present in the market. The National Bank obviously is the largest investment and asset manager, and there are certain, obviously, difficulties in our work with the National Fund. We are also big in the local market. In 2014, all pension funds were united in one fund, which is now called the Pension Fund. And I've talked about this already, but we are a conservative investor, but it's important for us to have a private investor who will develop the local market, including ESG bonds. Let me tell you a little bit about our experience. Today we're joined by one of our strategic partner, Amundi, Yerlan Syzdykov, represents our investor. He's our colleague, and that's the company that manages assets of the National Fund and assets of the other fund. And they have several mandates. They are responsible for developing markets, developed markets, and corporate bonds. And the international investor obviously will tell you more about what they do, what they invest in. Assets of the National Fund, which amount to 55 billion, are not just money invested. This is a set of instruments. All of them are diversified. And we have the saving stabilization part, about which amount to 50 billion tenge, out of which 30% are invested into shares. Inside those shares, again, we have another division. We have the so-called passive and active management parts, and the passive manager obviously does his part, and the active manager takes on more risks and must earn more in relation to the index. As for the pension fund, since 2014, we have been trying to do the following. When we started to manage that fund, assets in dollars were not very much. They were not very high, and basically we had Kazakh instruments in them. So we significantly increased that dollar part. Now the foreign currency shares is about 30%, accounts for about 30% of all assets, which amount to 9 billion tenge invested in foreign markets. And inside that foreign currency part, so we have 25% of shares. Why am I talking about this? Where is the reason behind that we're doing more and more with ESG. Also in December we had a forum in which the head of state took part, and we put forward a proposal to improve the way we manage our assets. And apart from some proposals about active management, high quality strategies, etc., we also put forward other proposals. More specifically, we want some assets to hand over under the ESG mandate. The National Bank has several mandates under which we work independently on our own, but there are some specialized mandates, such as the capital market. And we have some ESG there, and we also invite to be able to help us. We invite foreign colleagues, and we have in the National Fund participants are all key foreign companies. And as for investing, a decision was made, and throughout this year we were implementing this decision. We changed our internal documents. As for the National Fund, those 30% that are divided into active and passive parts. So the first step for this passive part, 20% of that passive part, which is 10%, obviously we decided to do that under the ESG mandate. So we have an asset manager, a key player, and so what we do is the following. We changed the MSCI World Index into MSCI Interest Index. Out of 1,500 companies, only 700 were left. And so MSCI themselves do this job, and MSCI actually charges quite a serious commission to give you access to this. They have a scale, a rating of sorts, and they look at those companies who are involved in this and who are more responsible as far as business finance and ESG are concerned. And within this scaling, you have a lower number of companies, but then they are all high quality companies. And if we look at the historic track record, say 10, 20 years ago, yields are similar, or profitability, and the yield pickup is insignificant when you invest in ESG. But why do we do that? ESG 2 years ago was just a trend or a hype. That was something that was fashionable, but this now is a reality among investors. There are a lot of key Islamic investors who now move on to ESG, and this transition to ESG means that indices change. Basically, what you have is a set of securities which are managed by your manager. And so you instruct your manager, you say to them, you've got to invest within this horizon, so to speak. And so we became part of this global trend. And now, out of the assets of the National Fund, $1.2 billion are invested in shares of companies that are committed to ESG principles. As for the assets of the single pension fund, we've been working there. We had a huge pool of tenge instruments, and we worked hard on diversifying that. You are all contributors, you all have savings in this single pension fund. And so people say, if the exchange rate is changing, what will happen to my pension savings? So for you to understand, volatility right now means that 30% of all your savings are in US dollars, and these are invested in various instruments depending on strategic locations. Some of them are invested in all sorts of instruments. So all of you, in actual fact, are investors in ESG products and in ESG companies. So we are increasing our foreign currency share, which amounts to $9 billion, and this accounts for 17% of the portfolio. The target is 25%. We would like to increase our foreign currency share, and first investments will be made until the end of the year. And we're talking about $200 million. Again, we will use the same principle. We have a manager, an asset manager. He will have an index changed, so to speak. And so that's what we do and we have been doing. So you are all investors in the contributors, so to speak, investors in the pension fund. And so we're trying to keep the pace international. The Norwegian fund did that a long time ago. They have $1.4 trillion, and they have primarily shares. And most of those shares have already been sort of transitioned, so to speak. And because of that, we have this demand for ESG instruments. When investors have changes in their portfolio, they start looking for other things. And we don't have too many investors in ESG, and I think this is something that should spur our local investors. And we have foreign partners who ask us about the following. Say, if the fund has billions of dollars in their portfolio, they must invest somewhere. That's their mandate. And say, if a local investor, and here I should mention what a lot of work has been done by the regulator. We have international certification. And so if you prove something, I mean, if you have these eligible bonds, and that's the point where we can attract foreign investors. Those are not just words, those are facts. And tremendous work that is being done by the regulator is very important. I think responsible investing is a very important image-related thing that needs to be done by the country. As for issuers, and we have some of them joined, who have joined us here in the hall. So if you are ESG eligible, it'll be much easier for you to place your bonds, first of all, in external markets and in the domestic market as well. Let me tell you a little bit about what we do as an investor. We are a state government agency. We are the biggest player in the capital market. But we have this problem. The market is small, it's not developing because there aren't too many players, and we're working on this situation. We're trying to make sure that there are more private companies in the market. But as the pension fund, we are prepared to support our issuers,
provided the missionaries entering the local market and provided he is ESG compliant. In this particular provisions, we don't have any clauses in the declaration. However, we just go and acquire all of the bonds, ESG, green ones. But the performance and the operations by regulator and the state-owned enterprises, in fact, push us forward, and we have to see some benefits. And shall we evidence such development and shall we have such emissions? I think that the very same can be applied to the private governors, that some part of the share must be ESG compliant, inclusive of those acquired at the local market. So the efforts that are currently undergoing, they have to be pursued further. And in majority of the cases, this is about the regulator's function. However, it is also about the emitter, because we have to have some incentives, maybe some tax preferences or some other incentives. We are hearing the message, we are working on this, and shall the company come up with such a decision, eventually, in the end of the day, they will kind of absorb all of these benefits. Can I have a follow-up question? Mr. Nurzhan, is it a fashion or is it responsible financing commitment? Why shares? Why not bonds? What drives you? Well, you see, I dived into the shares discussion because perhaps it is the major and most interesting instrument. In fact, we do have bonds, inclusive of those ESG related. But the situation is a little bit different. Once again, I will be referring back to the indices. We have 23,000 companies which have U.S. corporate index. In other words, these are companies with triple B minus of their corporate obligations, corporate bonds, pardon. What we have implemented, we have excluded those companies from our index that produce tobacco, for instance, and also those who have those companies that deal with coal or some other activities that pollute the environment. So we kind of filter and we exclude those companies who are far away from ESG agenda. In fact, the index itself was quietly greenly tuned, if I may, and we had around 1,000 companies that were excluded from the index. And it's not that much significant effort that we had with AXA. We just had to have some amendments to the portfolio as opposed to the major work performed with shares. We had a different approach, but my point is that we do have responsible investments inclusive of bonds market. Thank you very much. Mr. Puts, Ms. Puts, we would like to understand how you consult your clients and how you promote ERI principles and to what extent your clients are interested in this agenda. Thank you very much for this invitation. It's my pleasure to be in Kazakhstan. I've been to Kazakhstan 7 years ago, representing the position of impact fund focal point, but I live in Ireland now for last 5 years, and for 15 years I traveled across Eurasian countries, so I'm knowledgeable about the challenges the ESG agenda currently faces. Also, I am an independent director of Tajik Bank for the last 2 years, and therefore I've evidenced how agenda is implemented in an in-house manner. At this particular point of my career, I am consultant to Ogier company that is based in Hong Kong, UK, and Ireland. We have a team of 5 consultants and scientists. We work with legal team as well, but in some cases we don't even need a legal opinion because we mainly work on not only on compliance and regulatory function, but also on the implementation of and analysis of the policies, both external and internal, that the funds have to develop in order to be compliant with either European taxonomy that was recently referred to, or to the regulations that are mandatory in US, Hong Kong, or UK. In other words, my team is working on policies, and our clients are major venture companies and hedge funds. They have portfolios across the world, UK, US, Hong Kong, and for them it is crucial to understand how they shall adapt and how shall they amend their policies to be compliant with jurisdictions they operate. So, in other words, it's not only about their rights, about the taxonomy and analysis of the taxonomies within the countries we operate in. As for implementation, for our current clients, the regulators' requirements would be the most important because in most of the cases, they have to report out. They have to provide some risk-based policies or some credit assessments policies that have to be disclosed in public. And quite frequently, if greenwashing principle or policy is misworded or misinterpreted, this may entail significant impacts. This is why we have to describe every single thing to avoid this kind of taxonomy-related misunderstandings. In most of the cases, the clients approach us because of the requirements they have from their investors. Perhaps these hedge funds, they are not thinking about positive impact as their target. They just want to save their financial profit, but on the other hand, they are mainly demanded and requested and pushed by their investors. In other words, they have this external pressure. We also start working with the family offices, not only within LGR company, but also with the global family offices, and this is where we see the demand for impact. So where the companies seek for positive value from this engagement. So we also provide consultations about definitions and about the facilities and mechanisms on how to quantify and qualify ESG risks. Perhaps the major examples that I can share from the perspective of our clients, this would be about compliance with Article 8 and 9 of European taxonomy, which is the packaged solution of our company. The clients approach us requesting for their fund, new fund or existing fund, to make it compliant with European taxonomy and English taxonomy as another example. And secondly, we definitely see that our clients, they attract more investments, leveraging their ESG reports and estimations, provided they are transparent and clear. We are seeing a lot of amendments in the questionnaires that are shared by the investors, and we actually analyze the responses to these questionnaires. And the questions are becoming more complex and target quantitative and qualitative performance and KPIs. Funds have to also disclose the KPIs that they're going to reduce their exhaust gases. They have to share some estimations, if any, about social risks focus, and they have to demonstrate how are they going to diversify their efforts, diversify their teams. For instance, they have to incorporate various races, ethnicities and genders into their teams, and they have to report out on a quarterly basis. Before the investment approval, they have to place it on their website and publish it in periodical papers. These are requirements from both UK and US regulators. The major trends that we observe, well, the most successful companies, they start with a strategy, and they start with their council. They have some dedicated trainings, some practical exercises, not only for the board and for the council, but for the company staff. So they do not rely on the regulator, because this is ESG policy, and this is compliant with their corporate policy. So no matter where the company is operating, they kind of reduce the greenwashing risks, because their strategies indicates quite clearly the path forward and the area of their operations. And they are also successful in implementing this across all teams. Just to give you the example, so this can be council members, compliance members, award council members. And we are seeing the examples on how the directors within the council, for instance, ESG committee director, they have to be included into the audit committee. They have to be included into recognition and award committee, because regulators request to have the assessment of such ESG risks, and they also request for reports how the bonuses and motivations of directors reflect ESG performance. So the website of European funds have Article 8 and 9, and these policies have to be disclosed disclosed in public. Effective as of January the 1st, we are launching this verification process. We work with the European regulator, Luxembourg. We are checking the prospects of these funds to make sure they comply. Secondly, the team of our company works with the corporate directive. And this is highly relevant for European companies. But on the other hand, smaller businesses also getting prepared for this directive. And we have a more extensive agenda. It's not only about reporting now. In addition, this will require impact goals that have to be shared. And we also participate in Ogier. We have 1,000 staff. And in our global office, we provide consultations to our corporate clients. And mainly, my team focuses on investments. And this is called SFDR. SFDR regulation, which relates in particular to this European taxonomy. Well, this is all in summary. So, for our understanding, this is mainly for management fund, right? You are helping them to develop sustainable development policies. We help to develop and provide it. If there is a developed policy, we provide recommendations for improvement. Quite often, the clients ask us to attend their risk committee session. Each quarter, major hedge funds invite us to the risk committees to help the directors to explain to the shareholders the strategy for climate risks. The climate risk is a very relevant agenda, especially if we talk about US or Hong Kong funds. And this is another area of our operations. Thank you. Mr. Aidar, I would like to refer to you. We keep hearing the news in Kazakhstan. I think we should have invited Kazna Capital Management because in October 2022, they have joined PRI initiative. And during the very same time, KMG is proceeding with IPO. KMG has already announced that they have received the ESG rating of Sustainalytics, and we also hear that Gazprom is now in the process of obtaining such index. Mr. Aidar, we work closely with you, and we see that almost all of the green efforts are identified with participation of your Green Finance Center. And it's very relevant to have ESG ratings now. So can you please elaborate on how do you see the path forward for this particular ESG industry in Kazakhstan? Thank you very much. I would like to congratulate everyone with the Financiers Day. Let me put it in brief. Talking about sustainable bonds, green plus social, right? ESG, green and social. Last year, we had a very dynamic year. Currently, the capacity of sustainable finance is exceeding $500 billion in Kazakhstan. This year, we didn't have any emissions due to the volatility of local currency, of investors' expectations, and negative forecasting. So this year, we didn't have emissions. But we expect to have several major issuances of green bonds, and this will be in quasi-state sector. So within the 2 years' timing, we will end up with something around $500 million, despite the fact that in February we had the resolution of the government regarding subsidizing of the coupon rate. But it didn't turn to be efficient. The reason for that is that the projects exceeded the threshold of $10 million, and majorly the emitters of such bonds were quasi-state sectors, and they are not eligible for such criteria. You see, lending and bonding are something different. There is something different between, because when we talk about bonds, and this is about stock exchanges, this is about underwriting, and therefore we didn't incorporate it into the subsidies mechanism for small and medium enterprise. And we recently conversed with the Minister of National Economy regarding the roadmap, and we suggested them to introduce the amendments that will help to engage SMEs into the process of green and social bonds issuances. At the same time, we understand understand that investors, when they review $10 million project, they would not go for it. And within the ESG club, we have reviewed this issue, and we decided to have negotiations with the bank. Freedom, Development Bank of Kazakhstan. So we are inviting them to become investors for those bonds that are issued under coupon rate subsidies. So we believe that the strategy and objective of our center is to continue developing the green bonds market in Kazakhstan. Secondly, it's been the second year Kazakhstan is taking the second position of global finance rating in Central Asia, and this enables us to expand the instruments range. Current geopolitical situation gives huge competitive advantages to Kazakhstan, especially when it relates to ESG instruments development. And I think that availability of in-house ESG rating agency is something that I would refer to must. On November 11, during the summit of Turk states, the president of Kazakhstan has proposed to have the Turk Center for Green Finance to develop the methodology, the shared common methodology. And when we talk about ESG methodology, we talk about the regional aspects. So such center shall meet the expectations not only of several countries, but the region. And this year, when we were accepting the concept for green market concept development, the regulator has proposed the reform that rating agencies can be established under AIFC, under the provisions of English law, which can be then recognized as the common law. We understand that all of the rating agencies, S&P and other analytical agencies, they all target ESG indexes. And, Russian verifiers are currently sanctioned. So the Kazakhstani one is currently the only one in Asia, and we have an instrument to proceed with verification, which means that we can start providing services in the field of ESG ratings, but we need methodology to be made available. But it has to be compliant with the hedge club and regulators' requirements, and it's quite clear that the question is that do we really need in-house national platform and ESG methodology? My opinion, it shall be maximally close to those standard ESG ratings the global companies are used to acquire. So now we are negotiating it with Moody's and S&P's on the point, maybe we can have some shared platform, some methodology that can be applied to Kazakhstan and to the region. As for another impetus for the market and monetary operations, currently we are seeing that the national bank's role, especially during the beginning stage, is crucial. You've mentioned 54 billion that are currently managed by investment funds. The bank has a very good opportunity. You see, we can have the managing companies obliged to invest in 10% into ESG bonds, because the major issue we face is search for investors. And NBK is currently negotiating it with Moody's and S&P. However, they do not really active in our ESG markets. So when we talk about 10%, it's something around 2 billion that can end up with the management companies, providing positive input. Thank you, Aidar. Can I have a couple of points? Perhaps the national banks can answer these questions.
It's about, of course, HSBC business in Kazakhstan, asset management. Also, wanted to ask you about how do you see development of investment strategies, given growing investors' awareness of importance of principles of responsible investment? Do you see demands that your portfolios would be only ESG compliant? How is asset management business is developing in this regard?
So thanks very much for these questions. So first, I want to thank the organizers for the invitation. I'm very honored to be here in Almaty and be able to speak at this conference on behalf of HSBC. So we're present here through our asset management activity, where we provide investment solutions to institutions and especially here, the National Bank of Kazakhstan. So if I may just take a step back to, let's say, put in context what we think is happening worldwide on these issues. So I think if we take the last 30 years, I think we've seen tremendous growth, in particular in developing economy, but also, of course, in developed economies. And I think with this growth, as people become wealthier, there is a stronger demand to abide by some norms in terms of, for example, governance, social governance, for example, or environment-related issues. These increased demands from society in general has found a way into the real business life through some regulations. And sitting in Europe and particularly in Paris, there's been a long history of these norms. And these norms have actually largely been about disclosure, disclosing what is being done, both from an investor perspective, so the investors are being asked to disclose how they invest. The asset managers, as ourselves, are being asked to classify their products in certain categories, for example, within the SFDR regulation. And of course, businesses are being asked to disclose, for example, their carbon emissions, a number of items in the ESG and climate space. Now, these are just disclosures. In other words, nobody's forced to do anything here, but to disclose the way they invest, the way we classify our products on the asset management side, and the way companies behave in general. But this disclosure has a very strong impact in the market through what, as a former economist, I would call reputational effect. Nobody wants to disclose bad policies. Nobody wants to disclose that it's having negative impact on carbon emissions. Nobody wants to disclose that it's investing in companies that have, let's say, questionable policies in terms of the social dimension or the environmental dimension. Although, for example, public listing, as I'm sure you're very well aware, already imposes norms on companies. I think society wants stronger norms. As a result of these obligation to disclose and this pressure to disclose, we see everywhere in the world, as a provider of investment solutions, we see a willingness to go with these norms and from institutional investors, for example, be in a position to commit on certain principles, both in terms of S&G governance, the social dimension, but also in terms of the environmental dimension, so being waste, for example, pollution, but also, of course, carbon emissions. And although the regulations are different in different places, not always as developed as in Europe as of today, where the picture is moving very fast with the SFDR regulation. Everywhere there is this concern to adopt certain policies in terms of ESG and climate. And we therefore, as an asset manager, we are eager to provide this clarity to investors and to be in a position to provide investment solutions which are clear and transparent in terms of the norms that they implement. And in this respect, so I'm responsible for a particular activity within HSBC where we deliver passive solutions, but also quantitative solutions, and especially quantitative solutions in the equity space, but also, of course, I'm close to colleagues who do that in other areas like fixed income investment, for example. The trend is very, very clear. This disclosure actually leads investors, and especially institutional investors, to define norms and invest through people like us into investment policies that have clear abidance to certain commitments and certain norms. You asked the question in the last session, a very important question as who is financing all this transition? And actually, what the regulation has succeeded in doing is in creating an environment to subsidize certain norms, to subsidize certain attitudes towards carbon emissions. And so just as sort of anecdotes, we're developing, our business is developing quite strongly in many different areas. But to take an example, in Europe, it's obvious that the biggest institution ask for very clear or provide very clear guidelines in terms of the way they want us to invest. We've recently won business in Luxembourg, and it has ESG, waste, and carbon guidelines. We've won business in Australia, and Australia is adopting clear carbon policies so as to reduce their emissions. We've won business in Taiwan, and again, these are around specific indices that implement ESG and carbon policies. And whether the investment policy is active or whether it's passive, these dimensions are there in all mandates that are being issued in the market as of today, everywhere in the world. So just as a sort of short conclusion, it is developing very quickly. This development means that, as you've said in the previous session, it is definitely adopting as an issuer clear practices in terms of ESG norms, in terms of carbon emissions, enhances the ability to tap the capital in the market. So it is now clearly in the interest of companies and issuers to clearly identify their commitments and communicate their commitments. This then can be used by people like us to define the investment policies, and I think the world is moving in the right direction from that perspective.
Thank you. It's very interesting what you're saying. Basically, we have two aspects. First, we have a certain economy that we want to restructure. On the other side, the regulators and us, as CACE, we're also imposing requirements on disclosure. We make it voluntary, but we might move to obligatory. On the other side, we see more and more supply of ESG type of bonds and equity issuers who are compliant. On the other side, you also have a pressure also from the regulator, from the companies that give you assets for management, that it will be more ESG investments. So do you think that at some point of time it will be available only for ESG compliant companies, the funding in the capital markets?
I think it will be more and more difficult for companies which, let's say, have bad ESG practices to access capital markets. It will be more and more expensive for them because they are in competition with other issuers who providing better ESG and characteristics. The market will discriminate, and the non-ESG compliant companies will have to offer stronger capital returns to attract the capital. So I think the impact is going to be quite strong over time.
Sorry, you have to switch on the mic.
Oh, sorry. I was just saying, statistically, Morningstar already published a report that shows that a lot of capital has moved from Article 6 to Article 8. Article 6 does not consider sustainability. Article 8 promotes those characteristics. And already Article 9 also is starting to gain momentum. So I think there's already proof to say that the capital, at least in European Union, is moving to that direction, according to SFDR classification.
Это очень важно для нашей.
This is very important for our company to evaluate and attract investments in global capital markets, for us to be able to share our opinion. Mr. Syzdykov, can you tell us a little bit more how you invest in ESG compliant businesses and what products do you create for your clients? Thank you very much for this invitation. It's a pleasure to take part in such an important and representative conference in Kazakhstan. Thank you to the organizers and the National Bank for trusting us, Amundi. Let me tell you a little bit about our company. Perhaps not everyone is familiar with what we do. My name is Yerlan Syzdykov. I am the managing director responsible for developing markets in Amundi. Amundi is an investment company ranked in the top 10 largest investment companies in the world. We manage $2.3 trillion currently. It's one of the largest investment companies in Europe, and it's the only one in the top 10 from Europe. I am responsible for developing markets. We manage about 34 billion euros currently. 70% of that amount is bonds, 30% are shares. I am also a portfolio manager, asset manager in developing markets. This is what I do professionally, and this is what I've been doing for a long time now. So let me tell you about Amundi's journey and also about some interesting things that we have experienced, and perhaps I will even be able to share some experience with you and recommendations, similarly to Aidar and the representative of the National Bank, about how we can incentivize and stimulate sustainable investment in Kazakhstan. I will not talk too much about this alphabet, as we call it, soup, all those regulatory names. Some of them you've already heard, UNPRI. Those are principles for sustainable investing that were developed by the UN. Amundi, by the way, is not only a member, but also a founding member of UNPRI. We started working in this area a long time ago. 11 years ago, Amundi decided to transform our investment company into an ESG investment company. Back then, it wasn't that fashionable. Back then, not everyone knew what ESG were. But we decided to develop in that direction, to focus on that area, and we decided to transform our company throughout the next several years. How did we transform our company, and what have we done to be able to be one of the leading companies in ESG? To date, out of 2.3 trillion that we manage, about 769 billion euros, to be exact, are funds, basically, or are investments that are characterized and classified by us as sustainable investments. Today, we have a large number of projects and investments connected with ESG in developing markets. We are leaders in that area. We have about $7 billion invested in projects that are directly investing in ESG projects, green funds, and funds that focus on climate change. In this regard, as has been said, we are not, luckily, the only ones experiencing this journey. As our previous colleague has said, multilateral institutions and organizations play a huge role in this area right now. With them, we work very closely. In the previous session, we saw AIFC, EBRD. They are our clients and partners. We launched an investment product, the very first one in developing markets. It's a green product that was 4 years ago. That product was supported by the World Bank and IFC. Today, we have also launched other products in green markets and in developing markets. We work in China on a similar project. We also work in India with our partners in this area. So we are developing this market very, very actively. Why is this important? At the very beginning, since we are a private investor, the question was, who is going to pay for all that? Perhaps this is all not very profitable. I mean, investing in green products may not generate too much for you in terms of profit. And we talked about subsidizing by the World Bank. Actually, EBRD helped us to launch these products. We structured these projects so that the credit component or the credit enhancement component was strengthened, so to speak, by the World Bank. So we took basically the riskiest tranches. That way we took on those risks on ourselves, and we reduced risks on the main part of the portfolio, and we created good yields, having low risks, investment risks at that. And in this regard, the assistance of the partners was quite significant and material and important for the development of this market. I didn't want to talk too much about the regulatory component, but I need to say here that we have lots of changes and amendments, and we will have a whole session devoted to this topic later on. But when we talked about disclosure, we said that this impacts European markets very much. And because of that, we have to change the way our departments work on marketing, on client relations, etc., etc. These changes are major changes, and they are actually of regulatory nature. So now you are obligated to disclose in accordance with FDR. And the commercial component, as Dasha has said, she talked about the green funds, ESG funds, and the green dynamics, and the European FSDR classification articles 6, 8, and 9. She has mentioned that, but I'm sure you all are familiar with those issues, so I'm not going to talk too much about them. But this classification was adopted 3 years ago, and all investment managers are now working and reclassifying, so to speak, their funds to comply with all these new requirements. And the regulator also realizes that they need to work with the market and with such investment asset management companies such as ourselves.
And we are in the process of consultations with the European Commission. And this is where we consult European Commission in the field of sustainable investment principles in low and medium income countries. In other words, developing countries. The reason why we have been selected by European Commission is that we follow this path for 11 years, and we have invested our efforts and time. I also forgot to say that our investments into ESG and the path that we started 11 years ago, we have established a dedicated team of 40 staff, and they deal with ESG ratings. In that time, we didn't have ESG rating agencies. Remember, we have Sustainalytics and we have MSCI, the two major rating companies from the market perspective and the market share. So My message is that we did have good partners. We did have good rating organizations. We have been cooperating with. We work with 7 rating organizations that provide us with the data. And our 40 staff, they process this data and they end up producing our Amundi's rating. We have our in-house rating, which is in fact a unique product across the market. And this is because we have invested into this process quite a while ago. And this enables us to be flexible. When we were talking about converting Amundi into ESG companies, a lot of investors were questioning us, and what does it mean? It means that by 2022, all of our assets managed, let me put it this way, active assets managed by us, which means not indexed products and obligations, they will be classified as ESG products. At that point of time, we didn't have a classification that we currently have. This is why I'm telling you that according to the existing classification, around 40% are sustainable when we talk about our products. But at that point of time, that flexibility that we have obtained owing to our ratings helped us to fill in the declaration. The situation with declaration was quite simple. All of the funds that we currently manage, you see, we have estimated our average rating, and it is higher than the rating in the index. So the quality of those investments that we have from the ESG perspective will be higher than average across the market. This was the commitment that helped us to transition to this new taxonomy that Dasha was referring to. We became leaders in terms of funds amount that have been classified under Article 8 and Article 9 of SFDR. And we've done it quite promptly because the regulator was already aware about our efforts. And we have completed filing of our prospects very promptly, and we became leaders quite quickly. Talking about regulatory perspectives, we are expecting to have significant changes effective as of January next year. We will be having fundamental changes in terminology because Article 9, I will not be talking a lot about ways to define Article 9. However, Article 9 is going to be classified by the European Commission as that requiring the highest ESG level, and at the same time, in order to be included under Article 9, the fund has to have something around 100%, 100% of sustainability content. This makes the entire situation very interesting because the definition is not yet accurate, even from the perspective of European Commission. And European Commission allowed the companies to define the categories and that they are planning to refer to. Once again, because we have flexibility, we have our own ratings, and this is why it was quite easy for us to do so. As for the current dynamics, perhaps you all watch the news and you can see that the amount of funds, which is in Article 9, is reducing rapidly. A lot of funds are now going under Article 8 that does not require so stringent requirements of 100% investments into sustainable projects, sustainable investments. The most important thing is that we are observing some misalignment that the companies can define the level of sustainability of their investments, which is quite weird because you have the line just beyond the line of your portfolio, because you already have your understanding of sustainability, right? And you see such misalignment is quite significant. When we talk about MSCI and the World Index, different companies, they have different evaluation of the very same index. Some companies say 10%, some companies say 70%. You can see the gap is pretty much significant. And this kind of makes it difficult to understand the level of sustainable investments within the index. So in this particular situation, it's quite a challenge or a problem with categorization that is going to exist for a while, because the next step of the regulator would be to determine the definition of sustainable investments. So others can cascade it down and apply. So from the perspective of distributors and from our perspective, it is a challenging time. We have to explain it to our clients. We have to explain our methodology to our clients, and it differs from other companies' ones. And what regulator has requested for at the level of the prospects, we need to determine minimum amount of sustainable investments by the fund that will be compliance requirement. In other words, we cannot violate this minimum invested into the assets. For the developing markets, this is quite a low threshold. For the developed markets, they have a higher threshold, but it is the component that we have to live in, and the markets have to face the challenge of classifying their efforts. As talking about Amundi's input in ESG agenda, we had a very interesting term, sustainable university life. During our previous session, we have sustainable university life. So we also tried to establish sustainable office life. And we asked all of Amundi's offices, we have 5,000 people hired by our company, something around 60 offices across the globe. We asked them to calculate the carbon footprint. The carbon component of our operations, and we also declared that within next 3 years we are going to reduce this value by 50%. So it's not that we just provide good recommendations to our investors, but we want to lead by example. We want to explain people how this can be done, how this can be implemented in our routine lives, how we can reduce our carbon component just in our regular operations, which includes public transport, that can be replaced with bicycles, for instance, subsidizing of green transport in different offices. So we also put our efforts to observe and follow the principles that we are promoting for 11 years. I understand I talk a lot. My apologies, perhaps I have to wrap up. I just wanted to share a couple of things about Kazakhstan. Money is there. And you've mentioned the amount, 300 million. It's not that much. And we have to address the issue of increasing the share of green and sustainable investments. We are ready to stand as Kazakhstan's partner, or national bank's partner. And I think what has been declared yesterday and that initiative of the National Bank regarding demonopolization of the assets of the capital markets, where the National Bank is planning to transfer some part of their assets under external management by foreign and foreign investors, I think that KPI can also include sustainable development indicator, which will help to demonstrate that those market participants that will receive the money from the National Bank will commit and will provide contribution into sustainable development goals, among others. Thank you very much. I think we have a very good international overview of the situation. In Kazakhstan, in KASE, we work on ESG effective as of 2015, and I think that this topic became more relevant for local community effective as of the last year, when we had new environmental code introduced, new taxonomy applied, and green projects rates being made advantages. And from our side, we are starting the disclosure. We are asking the listing companies to disclose, and more than 20 companies, they publish their reports related to sustainable development and compliance principles. And apparently, a lot of companies in both financial and non-financial sectors, they adopt sustainable development policies that pursue not only their business operations, but also reduction of the carbon footprint. So it's not only about white collars, it's about the entire set of operations. And within this within such development, we have some certain issues. We, as the verifier, we have recognized several companies. So we check for the ICMA and climate bonds initiatives. And we see that there are no accurate requirements what is green and what is not green. And we are seeing questions from the emitters. They say, what if I transition from carbon to green operations? So we have, in my understanding, that we are going to have some transitional bonds, because we have adopted the policy of 2060, where we have to reach net zero. And 90% of our power generation is coal-fired, and it is about the cost of economy. And therefore, how it is perceived by the international investor. What is it there under transitional bond? And the second question, yesterday I heard, I learned about COP27, and there was a question about greenwashing. They say that a lot of investments are green. However, in fact, they're not that much green. So my opinion, well, I would like to hear the opinion of international experts. So how do you see the path forward for developing countries as related to the transitional bonds? And what would you recommend to our country? Daria? Or may I, please? Yes, thank you very much. I also want to add that our office has also transitioned to net zero. And for the first time in my career, I was asked to report which hotel I have selected, which transportation I am going to choose. It is going to impact. And we are going perhaps to have some carbon budget. So you're not coming to us anymore? Well, we are just starting the path, and we will see how it goes, because we work globally, right? But we have to report. As for greenwashing question, let me answer this question. The most challenging and frequently asked question by our clients, but we believe that there is a definition as differences in interpretations, and this can be explained by clear disclosure. If there is a disclosure, if there is a clear strategy, and there are ongoing training and awareness efforts within the organization, such risks can be minimized. But what we mention from time to time is where the facts differ. When companies say they are aligned with Paris Agreement or they aligned with net zero, but in real life they don't have targets. So they just have plans. So from this point of view, I would say that we need to have some deeper overview, and before publishing, before disclosing, the company would be recommended to have some in-house exercises to understand what do they want to publish for investors, because the major goal is to have the investors receiving very clear, very transparent information in what they invest. And if the company say that they are Article 8 or Article 9, the investors would have some certain expectations. So if a company is not going to meet those expectations, it's better not to apply, but be consistent. I think 29 billion of funds have been reclassified from Article 9 to Article 8, which is the right thing, because it's better not to exaggerate the capacities they have. This is how we see it. We do have greenwashing when they exaggerate or where they underestimate which is also greenwashing, if the fund does something or they do not disclose. And this is not the right thing. Information shall be there, and information shall be clear and transparent. Mr. Rabault, please, the floor is to you. Do you have any points to add?
So obviously the regulation tries to do its best in terms of containing greenwashing. So because this is a disclosure regulation, I think it is not an easy topic. I think we are all willing to be very clear and transparent in terms of what we do, and of course the companies that issue paper need to do the same. I think the quality of the data, the quality of the disclosure will keep improving, and I think this will certainly reduce possibilities of any sort of greenwashing in the market. On the second question, I think it's, so I started by saying that I think this trend is reflecting the willingness to go with some norms internationally as people have a higher level of demand in terms of, ethics, for example. Now, the problem with norms is that when you look at different countries with different situations, it's a bit unfair to ask everyone to go into the same norm. So I think this is a recognized problem. For example, exiting energy production through coal is something that cannot be done at the same pace within different countries, within different levels of development. I mean, you said yet that you rely here a lot on coal. You're not the only ones. Our neighbor, I mean, I'm talking as a French citizen, our neighbor Germany is using coal a lot. We're using much more nuclear energy. What is the best solution is debatable. But what is clear is that there is a sort of debt of industrial developed countries towards developing countries in terms of helping the developing countries to reach these norms. This is a very, very hot debate at COP27, just how much can developed countries help developing countries reach the norms. Of course, there's money involved, and these are very difficult discussions, but I think you're right to mention that this is an important topic if we want the transition to move forward.
Yeah, thank you.
Just to add also, European Commission actually it's not perfect either. It does include nuclear and gas in the taxonomy. It's also questionable, right? So it's not like the regulation is perfect there, yeah.
Yerlan, кстати, у нас в чате несколько вопросов. Вот хотела...
We have several questions. I would like to ask 3 questions to you. Maybe you can ask them in parallel. When you were developing ESG ratings, what is the share provided by Kazakhstani markets, and how did you verify? And did you do any look-back analysis of the ratings? And what company proceeded with the validation of the rating model? Can you please repeat? I didn't hear the first part of the question. Can you please kindly repeat? When we were developing ESG ratings, what is the share of Kazakhstani market, and how did you verify the relevance of the data? Did you have a look-back analysis of the ratings, and what company has completed validation of the rating model? This is the first question.
Also, there is another question. The share of direct investment, how will it increase within the next 3 years? And what criteria, ESG criteria, are used by international rating agents? Obviously, this is a block of questions dealing with ratings and increasing your share in ESG investment. Thank you very much. Let me just briefly comment on what has just been said also, but I'll start with the ratings question. Well, we need to understand the following here. If we look at coverage by our company, I mean, when we work with rating investments, and if we look at our internal ESG coverage, I talked about how we cover, ESG cover, so to speak, all investments that we make. I talked about that. So when we launched a Chinese fund, A-shares fund, that increased our investment base by 1,000 companies. Obviously, when you have 40 people, analytics, they will not be able to work on ratings. I mean, do not be misled. Today, 90% of all ratings that you have with respect to ESG are done, so to speak, by inference. There are certain models that are used. You insert basically the name of your company, what you do, etc., and then approximately you come up with your rating. When analytics, MSCI, etc., from MSCI, etc., they discuss all those ratings, they adjust them slightly, but anyway, 90% of all ratings are done by inference, blindly, as we say in Russian. The share of Kazakhstan in those ratings is equal to the share of Kazakhstan in capital markets. All investments are obligated to have these ratings and rankings, not only investment ratings, but also ESG ratings. So that's my quick sort of answer to your question. And the second part, I'm so sorry, but we're running out of time, it looks like. My last question is for Nurzhan. Did you calculate what losses you will incur at the National Bank if you focus on ESG investments, and during exactly when this will pay back? And also talk about investment attractiveness in the domestic market. Thank you. There are no losses, actually, no expenses, so to speak. You invest in instruments, in indices. MSCI is 1,500. MSCI ESG is 700 issuers. And the index can be slightly more expensive than it used to be. There is a difference, maybe. There are some additional commissions charged by the asset manager, but those are traditional costs and expenses. The main thing here is returns. I mean, that the return on your investment that you will get if you get involved in ESG. And as for shares, yields, 90% of yields can be correlated, as we say. So if you want to be ESG eligible, in other words, if you want to be a responsible investor, you will not lose anything in terms of your returns. So the brief answer is no losses, I mean no cost or expenses. And the market is built such that, I don't know, several years ago that was expensive. That was an exotic thing to do. But now this is mainstream. And this area is well developed. There are a lot of issuers, and yields and returns that we get is the same, if not even are the same, if not better. Aidar, if you have any perhaps comments you would like to share, and after that we will move on to the survey. Yes, a few words about greenwashing. About this year, a law was adopted. I mean, I'm talking about bonds, sustainable development bonds that you can issue, and there was this gasification project for Almaty. We're responsible for that. So greenwashing, those bonds, unlike green bonds, they must be expensive, because you also need to talk about how you're going to evaluate impacts on the environment. And so greenwashing factors have been taken into account in Kazakhstan. And so I think that legally speaking, legislation-wise, we have everything here. And when you talk to issuers, you just need to understand what guarantees you will get if you are going to enter into a green deal. So you want, obviously, to work closely with your investor to avoid greenwashing. Colleagues, we would like to demonstrate to you, to share with you survey results. So let's go back to the Kazakh reality. We do want to adopt green investing principles. So the question was, what are the obstacles for developing responsible investing in Kazakhstan? Investors do not understand ESG and its impact on long-term financing activities, zero. B, restricted availability of environmental, social management information on companies, 14%. And the last one, everybody is chasing returns and yields, damaging ESG, 29%. Well, obviously, we can say for sure that awareness of ESG is increasing, and we also experience ourselves here all these climate change impacts, etc. But 29% who said that information on ESG profiles of companies is not available widely. That is obviously also a problem. And also net zero policies need to be paid more attention to. Colleagues, all other questions, you can ask them during the lunch break. We will come back at 2:30. Thank you so much.